All right, coming into the Toronto Real Estate Board, we're going to start taking a look at some market insights in terms of what happened last month. And we're going to start off by looking at all home types. And we look at this to get a general view of what's happening in the market. We're including everything to get a good temperature check here. And, you know, this kind of just cruising along at the same point there in terms of median price. I think that's to be expected. And I can tell you that if you jump over to this year over year, this feels accurate when we're giving home evaluations and we're talking to sellers that are still thinking about last year's price, especially at this time of year, because we did have a pretty good start to 2024, that we are not where we were last year. And while we're cruising along here at 0.3% of an increase month over month, it's not that a lot is changing, right? And we'll look at the different pockets, because for this to remain neutral, there's a lot that's on the downside and there's a lot that's on the upside, but it's not quite as much. Nice to see the transaction volume come back a little bit though, Matt.
Yeah, that was a good increase. But when I was doing all these charts for all the individual places, there was a lot of color changes from green to red for March. Yeah. Not so much in the price and transactions for month over month, but more so for everything else when it's year over year and same time period this year from last year for the first 3 months. We definitely saw some decent decreases there. And, you know, one of the big things standing out too is the termination volume. We're seeing a lot of termination, and that's having an effect on you know, getting those prices up just based on that.
Yeah, those cancel and relists, the price adjustments, and we're seeing them in two forms right now in the markets that I'm watching. There are still some out there that are trying the holding offer scenario, and when they fail, that is a terminated listing, and then they relaunch at the price that they're going to try for their next strategy. As well, these terminations come from people that have been on the market 60 days and their price isn't working. They're terminating and launching a new listing. So when you see those go up, that's because homes aren't selling at the price that they came out there at, or didn't get the price that they want because they tried a different strategy. And so, yeah, up month over month, that's substantial. Up year over year, just goes to show why this is down. When we're looking at our median price, we're seeing a drastic increase there in terms of what we're looking at. All right, Matt, talk to me about where we are with our new listing volume. So you guys can see here 2025, and it's interesting because we were talking so much about active listings being high, but we were hoping that with new listings being stagnant over those first 2 months that you and I talked about, hey, maybe this will balance itself out over time. Well, boom, here we come with that new listing ramp up, and it's been substantial. Yeah,
it was quite the increase there. I mean, most months seem to trend to the side, and then when you get into the March and Aprils, you'll have your upticks. But you know, since 2011, only 3 other years have had a increase as high as this for the new listings, which was 2021, 2022, and what was the other one? 2012. So new listings is, you know, you can get high new listings and still be able to sell a lot of homes, and then your active listings are lower, which will help the price. But if you're getting new listings and absolutely no sales, you're going to have
downward pressure on pricing,
and then downward pressure on pricing. And that's why when we look at the market report, I always highlight new listings as just in the gold color, because you can have very high new listings, but as long as the people are buying at the same time, you can still have price growth there.
Yeah. Active listings. So again, here's where we're continuing to see that uptick. And you know what's interesting here is that there are a lot of years, as we're looking at all home types now, it varies when we look at detached and condo, of course, but looking across all home types, not the highest we've had in terms of active listings before. Now, like you hinted at, the big difference there is what is the buyer demand for these listings. If we've got active listings high and buyer demand is high, it's all good. We're going to keep kind of trucking along at a steady pace. But if we are seeing buyer demand drop off and active listings increase, that's where we really see our sales soften.
Yeah, to be honest, I'm surprised that we're below 2, 4, 5 different years.
Yeah.
I thought that we would be higher, but clearly there are areas that are absorbing the new listings.
Yep.
And, you know, when we look into some of the other areas, we'll see that there are massive new making all-time high active listings.
Yeah.
But as a broad market over all TRREB areas, you know, it's kind of in the middle.
Yeah, I think what's important to acknowledge as well is there are people that are sitting on the sidelines, right? Like, you know it, I know it, as we talk to colleagues in our offices and people, other agents in our industry. You know, that transaction that you thought was coming to market is maybe now holding off a little bit. They're waiting to see what happens. So in that sense, it as well, I think that there are people with moving intentions that are not coming to market yet. And same thing, I know that I think it was either Scotia or TD that released one of their surveys recently saying that they do see a backlog of people with intentions to buy, but they are just not coming out there as of yet. So I think this is what we're seeing there. All right, coming here into sales volume, you know, Matt, as we come off of active listings, I think here's the challenge. Yes, our active listings aren't like at all-time highs when we look at overall home types, but our sales, we are lower than everything going back to 2011 currently for the month of March. The only time that we might cross over this is for April 2020 when everybody was shut down and locked in their homes. But it's funny. Look, this is how quickly it can turn around. 2020, we're in the middle of a pandemic, and we jump. Everything stops. It becomes the lowest sales month on record for 10 years, and then all of a sudden, it shoots up by July to be record-breaking sales. So once we see people understand what's happening and confidence come back around, I know that a lot of that had to do with interest rates back when we were looking in 2020. But nonetheless, this is how quickly things can turn around. So if you are a buyer sitting on the sidelines, I want you to keep that in mind because you cannot time the bottom. So it's about just making smart decisions. And are you seeing an opportunity for what it is that you want to purchase? Does it look like a good deal? We talked a little bit about this before about making the market. Here's how it applies to buyers. You don't know what's going on with that seller on the other side. Matt and I have been watching some neighborhoods where all of a sudden a sale pops up and it's way lower than what we expected. Well, that buyer just happened to come across a seller that was motivated and ready to go, and they set a new price in the market. That's your opportunity as a buyer right now. And if you take advantage of that, you're going to be laughing in the long run because we know where real estate goes over the long term. But just to be mindful, it could turn around this quickly. That's just how our housing market goes in the GTA. We have way more people than we have houses. Right now, we're being impacted by outside influences. So once that changes or stabilizes, this is what our housing market has been known to do. Matt, when you take a look at this, what do you think about what I'm sharing there? How does that ring to you?
No, I think you're bang on there. And one thing that I'll add to that is, you know, I feel like once we put a prime minister in place after the election on April 28th, we're going to quickly go into negotiations with Mexico and the US for a new trade deal. And I do believe that all tariffs will be dropped once that deal is done. And you're going to potentially see interest rates come down if a deal is done. And you're going to see a whipsaw to the upside as all that pent up demand in the market comes storming back. So there is a window for buyers to negotiate favorable deals right now and to get things a little bit cheaper, because I do believe that we could have a trade deal later this year at some point, probably closer to the summer, and things are going to start moving to the upside again as that transpires.
Well said. So what I'm hearing is there is a reality where this does turn around quickly, where this tariff stuff kind of fades away. I mean, even with the news that came out yesterday, we weren't hit in the way that we were anticipating being hit. So this could change pretty fast. And it's like they say on the internet these days, like, we're living in the broken timeline. Well, this timeline could shift pretty quick, and we could be in that very escalating timeline just as quickly. So that's what I see when I see this. Like, you could look at this and see doom and gloom, and there's no doubt that we're feeling these low sales volume in our markets, like across the board. But when you look at 2020, you just see that example of how quickly things can pull up. That's the reality of it. And we've seen, even in previous years, we've seen these escalations just in the upswings, right? And so that is the trend. Honestly, that is the spring trend, and we're not seeing it yet, but it will come. As soon as there's stability, this is going to go like this. In all likelihood, if it holds true to the trends. As we look over our median sale price, again, this is accurate to what we've been feeling in the market in terms of that just kind of cruising along, neither up nor down, but in the short terms, as we saw like year over year last year, we're down 4.4% from the same time, and that's kind of what we're feeling. So, Matt, anything stand out here other than, of course, just reminding people, it was March 2022, and really like that peak in February. This is where interest rates started to escalate, and then we saw that decline. Yeah,
I think TRREB overall is holding up decently, considering we've got the condos mixed into these numbers as well. So to be only down $40,000, just under $35,000 from last year is not terrible. We're hanging in there to the prices. So I'm glad that we're not seeing this massive decrease. I know buyers out there would probably want something in between the red and last year's numbers, but as of right now, I think we will trail behind some of between 2021 and 2024. But I think where you get to August, where we typically see some dips in prices, if we get, like we were talking before, a deal, you could see prices start to accelerate to the upside and maybe finish in between where 2021 was potentially around that number if we see strength on the second half of the year.
Yeah, I'm thinking that too. If it cruises along, kind of mirroring what 2021 was there for a second, then perhaps crosses over here.
Because if we're going to get 3 rate cuts potentially on the variable side, it's very possible that we do follow the 2021 mark.
Yeah, it's exactly, like right in here too, because it's September and October where we're kind of anticipating those. So, maybe that is where we start to see it cross over. Like, I would say that my outlook is not I guess bullish for price increases, let's say. So I do think that we're going to kind of cruise along in this kind of space there. But like you said, if we get those 3 rate cuts this year, what does it look like at this back end, right? And then again, if we're talking about stability after our election, it could be a very different story.
I like when we've done a video before on how the end of last year was shaping up to be pretty decent. And then come around December, everyone realized that Donald Trump was getting in, and the confidence just fell out of this market. And I do feel that, if all this noise wasn't happening, our prices would be higher than what they are today. So I do think, you can see quite the acceleration at the end of the year, potentially in 2021.